afternoon, and firstly, you'll have to pardon me for my throat. I'll be clearing my throat. I've got a bit of throat infection. Anyway, once again, good afternoon to all, and welcome to our call after our quarterly results. With me on the call is Rishi, who's our CFO, and Nilesh Jain, our company secretary. We all together here from Pune. And I hope you have had the time to go through our results and the presentation which were posted on the stock exchange after our board meeting on 14th of February. So before I take you through the presentation, I'll just give you a brief background of the industry environment, which again most of you are aware. The challenge does not seem to be easing off at all. I think even the month of January, the downtrend continues. While there was an expectation that there will be a lot of pre-buy that will happen in the BS4, well, I don't think it has happened to the level of expectations. While maybe, yes, it's slightly better than December, but that's not a good benchmark for all of us, because December, again, cyclically has been always, pretty low. So, sum and substance, it's the auto industry is reeling under its worst ever sales fall in fact, in my career, in 30 years that I've not seen such a extended, prolonged, and also to this magnitude, the downfall that we are currently witnessing. So it has affected again all the segments, right from two-wheelers to three-wheelers to commercial vehicles, including passenger cars. Only the segment that possibly has bucked the trend to some extent is the UE segment. But again, as I said, there's hardly any differentiation now between UE and passenger car. It's a very fuzzy line. Both are at the end of the day basically passenger car as far as the customer choice is concerned. The reasons for the slowdown have been a mix of cyclical, structural, and regulation-led. We also recently had the budget, and again, all of you have noted that the budget really has not come out with any direct benefit, or any direct measures that are going to benefit the auto industry in the short term. Long term, yes, I think we can look forward to increased spending in the road infrastructure, as well as the focus on the rural segment. So that may bring in some results going forward. Again, it will all depend on how the monsoons come up, but at least those are the two plus points as far as the auto industry is concerned when it comes to the budget. And if we talk about our GDP growth rate, again, that's also a known figure that it has actually come down to a very low figure, and IMF has recently lowered the forecast for 2019 to 4.8. And personally, I don't think this will change greatly in the coming year. So we'll have to wait and watch on that front. Of course, the big impact that we all are foreseeing in the start of the year is the transition from BS4 to BS6. That's from April 20. This will definitely have an impact on the vehicle buying. We are already seeing launches by all customers. So the good part is all the customers are ready with their BS6 models, and they're launching them. So we are clearly seeing the kind of impact it will have, especially in the two-wheeler segment. The price increase has been in the range of 9 to 11%. The petrol car, there's a very small impact. It's just about 2 to 3%. But diesel vehicles again diesel cars will again have a huge impact of almost 10% plus, and similarly for the commercial vehicle. So this definitely will pose some challenge in terms of the sales, which again is expected by the industry from April onwards. Now, we had expected something to be announced on the scrappage policy as far as the commercial vehicle segment is concerned. That did not happen, but yes, the minister did mention that it's in an advanced stage, and we'll have to wait and watch on that aspect as well. So overall, if we see the 9 months for which we are discussing today, the industry has seen a decline of 13%. The sale of passenger car declined by 16% in April to December, 9 months. And in that, the passenger cars declined by 23%, and the vans declined by 37%. The vans mainly because the Maruti van, as you know, got discontinued, which was among the highest selling vans in the country, got discontinued from April owing to the meeting of safety standards. The sale of utility vehicle actually increased, which I already told, it bucked the trend. It increased by 6.4%. Commercial vehicle was the worst hit, decline ranging from 20% to 40% if you see the heavy commercial vehicles. This is mainly on the backdrop of of course lower economic activity, and we also saw the change of axle load norms last year, which has clearly increased the overall capacity available in the market. Three-wheeler sales declined by about 3%, and two-wheelers also did show a degrowth of almost 16% for the 9 months period. So this is the context that we'll have to look at the results from. I mean challenging times really, and they continue. So the only thing that of course we can do is to ensure that we keep looking at tightening our ship, tightening our belts, and reducing cost month on month, which is what we have tried to do. As I had mentioned in the call in the last, after we did the H1 results, we did kick off a very aggressive exercise for cost reduction within the company. I think that has started bearing some fruit, which you can see to some extent in the results that we announced for. If you see Q-on-Q results, you'll be able to see that reduction bearing some fruit. So this is what is the summary of the 9 months. I will now jump to the presentation. I request you all to now refer to the presentation, and to start with, let's look at slide number 3, which is the financial highlights for the 9 months. So revenues of 1445 crores in the 9 months of 1920 compared to 1566. Of course, last year was the best year that we had ever. So of course, those volumes will take some time to come back based on market conditions. But we posted a revenue of 1445 crores in this 9 months. EBITDA of 105 crores almost compared to 143 crores in the last comparable 9-month period. The margin of EBITDA is now just inched up to 77.2%. I'm talking of from the quarter perspective. A PAT of 58 crores in 9 months current year versus almost 78 crores in 9 months of the past period. But the good part is the cash flow from operations remain healthy and remain strong. So you had cash flow to the tune of 110 crores in 9 months compared to 70 crores in the 9 months of last year. So this has been our focus, which we have also mentioned in the past. So this is as far as the slide 3 is concerned. If we move to slide 4, which is the P&L statement, while I'll not go through each figure, but certainly you can, if I draw your attention to Q2 FY20 versus Q3 FY20, so both the quarters of the current year, which is the first column and the third last column. So the sale has actually dropped from the Q2 of 472 crores. It has dropped to 455 crores for the quarter. So a drop of almost 4%, but due to the measures that we took to reduce our break-even point and operation cost, we are able to report a slightly better EBITDA of 7.1% compared to 6.6% in Q2. So that's an improvement of almost 3% in the EBITDA. So while sales were down, we did manage to improve our margins in this quarter. Of course, compared to the last quarter Q-on-Q, certainly the performance is much lesser than what we would have expected. I'll move on to slide 5, which is again the P&L statement for 9 months. We just discussed the broad summary on when I started on slide 3. So maybe we'll move on to slide 4, which provides the segment mix and the channel mix. So here, what has happened, of course, is our passenger car volumes have improved. So this has led to a little shift in the segment mix. So in fact, our passenger car segment has moved from 18% to 22%, and also our CV has slightly improved. In fact, it is not that the two-wheelers, we have lost any market share. It's just that the market has come down by almost 15%. but we still have managed to post a growth in our two-wheeler segment. So our steady share increase in the two-wheelers continues. If in terms of the channel mix, of course, for the 9 months, we can see the OE is still at 85%. Aftermarket is 13%, slight improvement. Aftermarket we have done really well, I must say, because I am aware of what is happening in the industry. We have also looked at our peer companies within the group as regards their challenges in aftermarket, but we have Gabriel has been able to maintain a steady and good growth in the aftermarket segment as well in the challenging conditions that prevail in the market. So that is now 13.2. The export sale, yes, that has certainly been very low. This is mainly on account of one key market, which is Colombia. We had good exports going to Colombia. So there are a couple of reasons that has made the change. One is the model that we were supplying in Colombia has got discontinued this year, but the new model is currently underway. So we'll see some sales starting in the next fiscal. And the second point is that one of the customers who used to buy it from Colombia, so we used to export it to Colombia. Now the customer is directly buying the same parts, parts from us here in India and exporting it as a kit from their end. So there is a change of exports to domestic sale to that extent. So these are the main aspects. But like I mentioned, the key point, we are also, of course, concerned on this drop in export. We definitely want this export part to be much bigger. So we are waiting for some good export orders. And like I mentioned last call, we got our first breakthrough in DAF, Netherlands, which is Europe's number one player. We got our first order for their trucks. In terms of cabin dampers and lateral dampers. In fact, the original business was only cabin dampers. They have also awarded us the lateral dampers, based on the good response that we showed during the development. So this will definitely improve our exports in the coming year, while the next year sale will still be not high, but it will definitely peak in 21-22. The second export order, which was also mentioned, was a Volkswagen Russia order. That is also currently under validation. We have just sent our first proto samples for their testing, for their winter testing. So this will also happen in the next fiscal, but towards the end of the next fiscal. So these are two export orders which are very key. We have broken through the OE high volume segment, if I must say, and of course both of these are very, very demanding and very premium, good marquee clients. So we are sure if we deliver this, we'll definitely be looking at some breakthrough in exports going forward. Now I'll move to slide 7, which again presents the quarterly trend in a bar graph and a line chart. So just on, if you see the EBITDA, which had dropped to 6.7, 6.6%, we have, as I mentioned already, reversed the trend and we have moved to 7.1% now. I will move to slide 8, which is the balance sheet, which basically it's half yearly. So this is we have not put the 9 months, so I'll not spend time here. Only suffice to say that our cash flow position and balance sheet position continues to be pretty healthy, and our focus on that remains as always. If we move to slide 9, you can see here that our ROIC, while it has definitely dropped from the best figures of 33% in 17-18, we are still at a healthy figure of 22%, again in the backdrop of the challenging conditions that I already mentioned. Moving to slide 10 is again the cash flows. This is again for the half year, so I'll skip on to the slide 11, which is just a quick update on the award of the Great Place to Work. While I had shared this earlier, we recently in fact tomorrow we are going to receive in a function in Mumbai the award for being the top 30 in the best places in manufacturing in India. So This is a very, very, honorable position to be in, because finally, as we all believe very firmly, it is people who will make the difference. And we at Gabriel and Anand Group, we focus a lot on this very important aspect, and we are glad that we are being recognized, and that we can continue our journey on this front. So we will be receiving this award tomorrow. Slide 12 is on the other customer awards. So we just wanted to share that we won the probably India's most sought after award as far as quality circle is concerned, because this comes from Toyota. Our team won the gold award. That's the number one award, winners trophy in the Toyota quality circle competition. So this award will be getting at the annual forum that Toyota will have in the month of April. So this goes to show only that the efforts that we are doing on improving quality and also on focusing on total employee involvement, because quality circle is the way how we involve each and every employee at the shop floor level and keep them motivated and encourage them to do more and more on their voluntary basis. The good part of this quality circle, just to mention, is these are projects taken by our team of brilliant young operating engineers who work beyond their normal work on their own and complete the project. So it's really fabulous to see them working with such great zeal and enthusiasm. So that's why I find this award particularly special, and that's why we put this up. So this is practically the end of the presentation that we had. After this slide is the overall business overview, which is you all must have gone through already. So this is in short the presentation that we had to share. So to conclude, while of course I'm keen to look forward to your questions and feedback, but to conclude, the environment continues to be challenging, and we are looking at and the only prudent thing to do right now is, as I mentioned, to cut the cost, and that is what we are doing. We have touched each and every aspect of cost reduction. I think right from raw material to variable overheads to fixed overheads to manpower to improving our cash flows. So every aspect, I think we have not left anything untouched, and this will continue to be the flavor even in this quarter. So we'll see how the market will pan out. The big if, and I have no answer. Neither does anybody in the industry have an answer. How will the next couple of months pan out? We'll have to wait and watch. But yes, certainly the overall voice in the industry is that after the festive season, things will start falling in place, and we should start seeing the market growing back. So till that time, yes, we'll have to be continuously looking at efficiency improvement and reducing our costs. So on that note, I would conclude my opening remarks, and I would hand it over to the moderator to open up for question answers. Thank you so much.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1. The first question is from the line of Arun Agarwal from Kotak Securities. Please go ahead.
Good afternoon, sir. Thanks for the opportunity. Sir, my first question is on the new businesses, that we started during the quarter. Could you just throw some light on those new models that we started this quarter or maybe in second quarter?
Thanks, Arun. Good to hear you again. We did start in the third quarter, of course, the Espresso, the Maruti Espresso. That started, that was the SOP. So the volumes are doing well. It's almost 10 to 12,000 per month. Mm-hmm. And while it was not a new product, what also did change, I did mention that passenger car segment improved from 18% to 22%. The Brezza, the diesel Brezza, which was where we are single source, that really started, hitting, almost record numbers from around the month of Diwali. Okay. Suddenly I think people realized that, this the diesel model is going to go, get obsolete after April. So there's a sudden uptick in demand, and that continues even to date.
Okay.
Brezza is doing quite well, though it's not a new launch, as I mentioned.
Right.
And the other new launch was, of course, is the Activa with the front fork, the new generation Activa of Honda. Mm-hmm. So where we are supplying the front fork, we have started supplies from our Sanand plant already. We started supplies, let's say, bulk supplies have started in the last week of January.
Okay, and is a share of business different in front forks and versus the earlier Activa 5G?
Meaning?
Our share of business, we are supplying front fork to Activa 6G, right?
We are supplying Activa, the normal shock absorbers.
Yeah, to the new Activa.
Yeah, to the new Activa.
So is the share of business in this front forks and the earlier, shock ups used in the early Activa, is it different or?
It is different. Yes, we had a much higher share in this, the shock absorber and type of Activa, but with this front fork, our businesses, the share of business is lower. The value of the part is, definitely much higher.
Okay. But net, we are not getting anything extra in terms of revenue, I think.
No, we will certainly.
We will.
Yeah.
Okay. And any model got discontinued from our end during this quarter? Last year, we lost some business. In the past, maybe third quarter or fourth quarter in January or something.
No, not that I know of. I think. No, only thing is we might gain an entry in the Tata Motors Tiago. Okay. That will happen. We expected that to happen in this quarter, in the current Q4, but that might get shifted to one more quarter.
Okay, and will we are present in the Brezza petrol as well, right?
Yeah, Brezza petrol is ours, 100%.
100%, right?
That's right.
Okay. So my other question is on the cost side. So we talked about the cost reduction initiatives that we took about, and look at this quarter. The raw material cost has seen almost around 200 basis point decline on a Q-on-Q basis. But our other expenses seems to have increased despite the reduction in revenue. So any specific line item where we saw higher other expenses?
Yes, of course, in terms of on manpower front, if you see the expenses gone up slightly, because, manpower is always a fixed and a variable, and you can't just, reduce manpower. While we have, definitely done some rationalization. We have reduced our manpower on all fronts, but that effect, will only come later. And to make matters worse, it's percentage. If you look at the percentage to sale, and our sale was lowest in this last quarter, so that has taken up the percentage a little higher. So manpower is one reason, and in terms of we had a little higher expense towards the commissioning of the Sanand plant.
Okay.
Those two reasons mainly took this other higher.
Sure. So the 7.1% margin that this quarter, even if the revenues remain at similar, should we see some more improvement, the cost reduction initiatives that we have taken, or is this something that we'll sustain at 7.1 something?
No, target certainly is to look at a better number.
Okay. Any ballpark figure you could?
No, we don't share that, but yes, clearly we are looking at improving our EBITDA further, certainly.
Sure. And so could you help me out with your capex for 9 months this year and what we intend to do next year?
So Rishi, maybe you can take that.
Good afternoon. So the capex for 9 months is roughly around 400 million, and for this year, the rough estimate is around 70 odd crores.
For full year, 70 odd crores this year. This for 20 or 21 you talked about? 70?
1920.
20. So in fourth quarter, we are going to add around, say, 30 crores more, right?
Yes.
And next year, we have any figure?
Next year we are right now currently in the midst of making our budget, but the figure will be in the same range of 70 odd crores, but maybe a little higher because we are actually also looking at investing a little, some amount towards automation.
Okay.
So that's a key focus area that we have taken partly this year and also going forward in the coming year. So we'll be looking at a figure which is slightly higher than 70 crores. Yes.
All right. Thank you. That's it from my side.
Thank you.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from the line of Kunal Kuladia from Anova Capital. Please go ahead.
Hi, sir. Thanks for taking my question. So my question pertains to our exports. So as you mentioned in your opening comment, is that we have seen some pressure in the export market, especially Colombia. So just wanted to check, are we targeting any new geographies on the export front?
Yeah, Kunal. So we are targeting new geographies. So one is, of course, this, as I mentioned, the 2 OE orders, because, finally the volumes come from OE orders. So we are going to start the supplies in the next fiscal of these 2 new orders, DAF of Netherlands for commercial vehicle and Volkswagen of Russia. So both these are, one is in the Russian market, one is European market. That is one. Second is Colombia, as I mentioned. The model that we are supplying has got now changed, and then this is a Yamaha model. So this will also start in the next fiscal. So that is a Colombian market. In addition, if you talk about aftermarket, we are certainly looking at geographies across the globe. Again in Colombia, I recently had a meeting with the Honduras dealer, and he is really very, very positive about how things will happen. In terms of our sales in that region. So Colombia remains a focus market, and yes, our continent remains a key market as well. We also have some good exports in US and Australia. Both of them, they are not, I must say, they are not growing, but they are static, yes.
And sir, as you mentioned that the 2 of our clients are from Russia and Netherlands, so how have been the order flows there? Are we seeing good traction?
This is an OE order. This is a OE customer.
Okay.
So, once you get the order, you get the entire order. So, traction is of course 100%. The only if is how will their product do in the market. That is the only if. Otherwise, we have for Volkswagen we have 100% of the share. For even the DAF models, we will be moving to 100% of the share.
Okay, sir. And my next question pertains to as we are seeing BS6 transition from 1st of April. So on a macro front, are we seeing any inventory stack up from the OEM front? And just wanted your view on that.
Inventory of BS6?
Yes.
So yes, people have they have started. Of course, most of the orders now for us, the shock absorber remains the same. So in many cases, it's the same shocks that go to the BS6. In some cases, it does get changed. But however, knowing what is happening in the industry, they are building up stock for BS6. But stock levels are definitely, all OEs are really cautious about the stock buildup that happened, pre-Diwali period. So stock buildup is, still being controlled, and I must say it's in a healthy level currently.
So we are seeing, from our point of view, we are seeing a healthy order book, right?
Well, BS6 currently, as I said, order book is okay. It's definitely, looking at, as I said, if I look at the month of December, it still is okay, but there's a big question mark on how March and April will pan out because no industry, in fact, none of the industry people whom we interact, OEMs, is willing to take any kind of guess, in terms of how will the market be. So it's really difficult for me to take a guess as well.
Okay, sir. That's helpful. Thank you. I'll join back in the queue.
Yeah.
Thank you. Participants who wish to ask questions, please press star and 1 on their touchtone telephone. The next question is from the line of Mumuksh Mandelsha from MK Global. Please go ahead.
Thank you, sir, for giving the opportunity. So just want to understand Q&Q gross margins or improvement. One reason obviously is cost reduction. Also, it's because of the higher share of PVs and any price hike taken by the company, sir?
No, this is mainly of reduction in cost that we have done. So price hike in today's condition is really difficult because OEs are themselves under very severe pressure, and in fact, to the extent that commodity has corrected and gone downwards, we have to pass on that reduction to OEs, which is also included in our results. So sum and substance, I think it's mainly due to the cost reduction that we have improved margins.
Right. And the highest share of PVs does make impact on gross margin?
Also, to some extent, just to add, is that we have also got some better margin business as well, which is improved in this quarter. So even that has helped us a bit.
Right, sir. Thank you so much, sir.
Yeah.
Thank you. Participants who wish to ask questions, please press star and 1 on their touchtone telephone. Ladies and gentlemen, to ask questions, you may press star and 1. The next question is from the line of Arush Seth from VDV Securities. Please go ahead.
Sir, I wanted to know about our railway business. Sir, any updates on the same?
Yeah, Mr. Railway has been doing quite well. I think that's what I mentioned, some better margin business. In fact, Railway has improved significantly because, as you know, the Indian Railways is slowly changing all the coaches to the LHP platform, which is a new platform. So that has improved significantly. The numbers in the overall scheme of things remain low, but I think the growth has been quite good.
Okay. Thank you, sir.
Thank you. The next question is from the line of Aniket Matre from Haitong Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. Again, coming back to the gross margins question, was there any commodity cost benefit that you got this quarter, given that commodities are weak at the moment?
Yes, Aniket, of course. That I think you see the main reduction that has happened is in the raw material percentage only.
Right.
So that definitely has helped us. Like we had mentioned that we had a bit of a lag that was, putting pressure on our RMC raw material percentage. So that this sustained reduction in commodity has certainly helped. And in addition, we have also taken focused efforts on what we call value engineering, or what we call even to some extent alternate sourcing. And we are also we are also doing some import substitution as well. So all this put together, we are able to reduce the raw material percentage.
Understood. And just again on the gross margins front, post BS6, have we been able to pass on everything, or we had to sort of absorb something because there's so much of competitive pressure / cost pressure on OEMs?
No, thankfully we have been able to pass on everything. I think there's nothing that is unrecovered.
Got it. That's good to hear. And final question from my end is on the inventory front. While you indicated that inventory is sort of at the reasonable levels, could you comment a bit on the CV inventory per se? Because we are hearing there is still some decent stock of MHCV trucks at dealerships. So just want to understand, or would you expect OE sort of procurement from your end for the next couple of quarters, say Feb and March, to be a bit lower, given that inventory is still sizable at dealerships?
Yes, if you've been reading what is appearing in media, clearly Tata Motors is doing some good correction in the inventory levels.
Sure.
But there are some customers again that we are seeing reduced schedules. Yes, your doubt is right. We are seeing some reduced schedules in the month of February and March. And that's why I said, I'm a little uncertain on the month of March because, finally people will do everything. All the corrections will happen in the month of March.
Right.
That's the last month before you move over to BS6. So yes, month of March is what all of us at the industry are, just waiting to see what will happen. But in PC there is not, I don't think any much reason to worry. Even in two-wheelers we have fair bit of, forecast from two-wheelers. CV is a little down, yes.
Got it. And finally, sir, on this railways thing that you said, very good growth, could you indicate what was the growth this quarter for us?
In this quarter, I wouldn't share the numbers, but the percentage growth has been, easily to the tune of 40%.
Oh, that's pretty decent. And how much does the railways contribute roughly to our revenues?
That's the figure that as I said, we don't share.
Okay.
But yeah, it's good growth, and this journey of their adoption of this LHB coaches is continuing, though at a slow pace. Overall, they don't make many coaches like, let's say, the automotive industry. But that trend continues.
Got it, sir. Thanks, and all the best. Thank you.
Thank you. The next question is from the line of Lavita Lozado from Anand Rathi. Please go ahead.
Hi, sir. Thank you for the opportunity. This is again a follow-up question on the earlier question on the gross margin side. I see a sequential improvement on this quarter. So I just wanted to understand, is there an impact also because of the inventorization?
I didn't get impact due to inventorization, meaning?
So gross margins have improved sequentially.
Yes.
Does inventory have any positive impact? How much is that impact from the inventory side, if any?
Not able to understand the question. Since inventory, meaning which inventory?
Okay, so how do you explain the improvement in the gross margins sequentially?
Okay, so as I said, as I explained to Aniket also earlier and Arun earlier, that mainly on account of cost reduction, mainly it's come from raw material reduction. One is the commodity reduction that has happened in the market. Second is, some past recoveries that we were able to also complete for the year. And third is, the raw material efficiency improvement exercise that we do in terms of, negotiations and value engineering and import substitution. So all this mixed together is reduce the raw material cost.
Okay, sir. Thank you.
Thank you. Before we take the next question, participants who wish to ask questions, please press star and 1 on your touchtone telephone. The next question is from the line of Jaimin Desai from ICICI Direct. Please go ahead. Jaimin Desai from ICICI Direct, you may go ahead with the question.
Yeah, hi. Afternoon, sir. Thanks for the opportunity. My first question was in respect of our import content. I believe it currently, or it used to stand at roughly 20%. Is that right?
It's not as high as 20%, but we do import of let's say to the tune of 230 crores a year. So clearly we are, we have already indigenized several products this year, and we have made an elaborate import content over the next couple of years, next 2 years.
Right. So actually, my question was from the short-term perspective because I believe we used to import these aluminum piston rods from China. So with regards to the ongoing virus issue, are we seeing any issues on that side?
We import aluminum outer tubes for our front fork from China. And we used to import piston rods. But piston rods is something that we already localized in this year. So we do not import any piston rod now except some very small quantities. I must say we have almost, the import substitution has been more than 80% in piston rods. We continue to import while we have taken actions to reduce. Now coming to the current issue of coronavirus, because they had this lunar festival, break in the. We had already stocked up our quantities, so we are not affected by the coronavirus as of now. And as we speak to our Chinese supplier partners, they have already commenced production. Last week itself they have started to the extent of 30%, and this week they are expecting it'll go double, and in one more week it should start completely. We are not seeing any impact. Taken a detailed review of our stocks. So luckily we are not going to impact our customer. That is for sure. Yes. Now, if some customer is impacted due to some other supplier, to that extent, that uncertainty remains.
Understood. Secondly, sir, on the EV side, we already have presence with two-wheeler guys like Torque, Okinawa, Ather. So, are we there for the new launches like Chetak and TVS iQube also?
Not with Chetak, but with TVS iQube, yes. And
okay.
As I mentioned earlier, we are well entrenched with the 2-3-wheeler electrification. In fact, all the major ones except Chetak, we are there already with them, with our parts.
Including Ather's 450X, right?
Yes. Ather is a really good customer for us. Ather, Okinawa, Ultraviolet, Torque, TVS iQube. We are even speaking to Ola Electric. So that is, as regards 2-3-wheeler is concerned, and 2-wheelers and 3-wheelers, we are with Bajaj, Mahindra, Kinetic already.
Right. And on the 4-wheeler side, we are there with Mahindra's EKUV and E-Verito. And for Tamo, are we there on Nexon?
No, we are not on Nexon, but on E-Verito and EKUV we are there. So once we get on Tigor, we may get on the E-Tigor as well. Happen in the next fiscal.
Okay. And finally, sir, earlier you had indicated that in sometime in FY21 we would be present in Seltos as well, and I believe we've gotten approved for Seltos, but the actual billing would start sometime in 21. So is there some greater clarity as to when actually that will start coming through for us?
So just to clarify, on Seltos, what we had mentioned is we'll be a tier 2,
right.
like currently do on Creta as well.
Right.
Mando, and they'll supply the shock absorber. So yes, the validation is done, but they are currently still not started supplies. But yes, in FY20, in 2021, we should start, commencement of supplies. We should see that happening in the second half.
Second half.
Yeah.
Okay. Fine. Thanks, sir. Thanks. That's it from my side. All the best.
Thank you very much. That was the last question in queue. I would now like to hand the conference back to the management team for closing comments.
Okay. So thank you all for the questions. We did discuss at great length as to what are the challenges as well. So I did mention on the coronavirus, one question did come. So on that, the industry is currently also not yet sure which way it will affect. There are some very small disturbances that are being caused as of now due to this issue. But the good part is when we spoke to our suppliers, things are now starting. As long as they are not in Wuhan and the affected province, things are starting back. And also what we saw in the papers that there is a little reduction in the number of new cases. So hopefully, I think we should get over this as well. So that's only one one challenge that we see which has emerged newly. Otherwise, yes, this year will remain tough, and even the first quarter, which is April, May, June, because of the price hikes, how the customer will respond will remain to be seen. Petrol cars does not seem to be a problem at all. That even today, most of the vehicle manufacturers have started selling Euro 6 and BS6, and the demand is quite okay. It's only the question of two-wheelers and commercial vehicles and diesel cars, so that we'll have to wait and watch. So with this, I'll once again thank you all for your questions, and hope that we definitely see a much better year in 2021 after the first quarter. So thank you once again, and bye-bye.
Thank you very much. On behalf